This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachurdes. Thanks for joining us at XM.com. It has been a hectic week for global markets, with the underlying theme being a disbelief that the Federal Reserve will execute on its interest rate plans. Even though Fed Chairman Powell did his best to dispel speculation that rate cuts are around the corner, traders are not buying it. Market pricing currently implies interest rates will end the year near 3.7%, dramatically below FOMC projections that rates would close the year above 5%. Investors seem concerned that a recession is quietly brewing and that the banking episode was only the first symptom in this process, which will ultimately force the Fed to slash rates. With bets for rate cuts intensifying, U.S. yields have been smashed lower, wounding the dollar, but breathing life back into rate-sensitive plays such as tech stocks, cryptocurrencies, and gold. In the FX domain, the Japanese yen has been the primary beneficiary of bets that the Fed will abandon ship soon. Inflation in Japan has started to cool off as energy subsidies kicked in, but wage growth is likely to accelerate following the stellar results of the spring wage negotiations, both a blessing for Japanese consumers. All told, the stars seem to be aligning in favor of the yen. In contrast, the dollar has been hung out to dry. While the greenback managed to claw back some of its recent losses early on Friday, it is still set to close the week lower. In the Eurozone, the latest business surveys painted a brighter picture. Business managers did not appear particularly concerned about the recent mayhem in the banking system, focusing instead on an encouraging increase in new orders, fading energy concerns, and abating inflationary pressures. Despite these cheerful surveys, the euro is getting smoked on Friday. This might reflect concerns about the health of the banking sector, with shares of Deutsche Bank sinking by 10% today, and a spike in credit default swaps revealing rising demand for protection against European banks blowing up. Over in the United Kingdom, the Bank of England raised interest rates yesterday as widely expected. Sterling moved higher initially, but quickly lost its momentum as BOE officials appeared hesitant to signal that further action will be needed. Stock markets edged higher yesterday with some help from tech shares, but have turned around on Friday. This is today's Daily Market Comment. Thanks for joining us at XM.com.